continue to chat about the markets here. David Stryzewski is with us, CEO of Sound Planning Group. How are you feeling? Bullish, bearish, cautious as we hit records today?
You know, hey, it's amazing. I vote the market goes up forever. I think the quote, though, that really encapsulates this moment is one that Warren Buffett gave us here when he talked about investing in a bull market, and that is, only when the tide goes out do we find out who's swimming naked. So, you know, I think that the tide's going to be in for a second as we're looking at a melt up right now, certainly. But I wouldn't hold my breath too much on that, as the second part of the year is probably going to not bode as well for GDP.
Right, understood. So with that, where do you see, I mean, if the S&P right now is around this 5,000 mark, what kind of range are you watching for?
You know, Nicole, it's kind of difficult to you know, project. No one knows ultimately where this is going. I mean, when we look at you know, the Magnificent Seven, which is, you know, just like the, you know, the big talking point here right now, they are a significant portion of the U.S. stock market. They have cash right now. Why? Because, you know, the S&P 500 is cap weighted. And so where do we go from S&P, you know, 5,000? I think that you could probably see another 10% on the upside, possibly even 20% on the upside if we really get to a melt up type of a moment here. But valuations are going to be difficult at these kind of nosebleed levels because, you know, price per earnings is elevated right now, and they are definitely above what has been the normal trend according to the Buffett indicator or the Shiller PE ratio. You know, we're elevated right now better than 50%. Which doesn't mean that it has to crash tomorrow. It's just that we just need to recognize that we're getting a little top heavy right now. And, you know, the downside could be significant. And there's a lot of things that we could probably see go wrong from here.
Yeah, are people overly optimistic maybe?
Yeah, I think that that's true. You know, our natural mentalities at moments like this is that we don't want to, you know, the fear of missing out. We don't want to miss, you know, another amazing story of NVIDIA just, you know, destroying numbers and expectations year over year. I mean, it's been an incredible story to watch. Look at Microsoft right now, the largest company in the world. You know, that's a home team here in the greater Seattle area for me. And so these are pretty exciting moments as we're seeing things evolve. You know, Microsoft was stale for a long time. Now it's really growing. And this AI revolution, I think, is really, you know, positioned well for Microsoft to capitalize on integrations into our day-to-day. So, you know, is everyone kind of a little bit excited? Yeah, I think anytime you get into a renaissance, anytime you get into, you know, new opportunities, you know, we ultimately, you know, speculate in some of these things. Big money's chasing it, foolish money's chasing it. And, you know, we're capitalizing on these things as well. Just we don't want to have too much exposure without real anchors that are really going to hold us.
Right. You have a few names in the Magnificent Seven focusing on AI. Do you like those names? Tell me about a couple of the names you're watching, and do you like them?
Sure. Well, you know, it's not like you like them or don't like them necessarily. I mean, right now, hey, when things are working, of course you think that these things are amazing. So yeah, Microsoft is doing incredibly well, as I just noted here. Tesla is down about 25% on the year. And so, you know, if you look at Tesla as a strong player, which I certainly do, even though EVs are cooling down, you know, Elon Musk is a force to be reckoned with right now, and that looks like a buying opportunity. You know, if we look at Amazon right now, it has been the big lagger of those seven. And, you know, as far as my house is concerned, you know, we've got Amazon packages showing up every single day. And I think that that's like most people here today. So, you know, will we look and see the consumer, you know, continue to move forward with those things? Yeah, I think so. And I think AI can really improve even what Amazon has been doing. And certainly they have figured out how to become as efficient as possible by now using robots and a number of different things. So I think that there's a lot of positive things that are moving forward right now in those Magnificent Seven, especially because they have the ability to, you know, spend money on new advances. So that CapEx is basically happening in those big seven because they're being fed so much.
Microsoft, Tesla, and Amazon are those three picks for you, I would say. I know you had NVIDIA here as a leader, but that's less of a pick, right?
Well, you know, here's my concern about NVIDIA right now, and it's not about NVIDIA. My concern is about the geopolitical issues that are taking place right now with Asia. And, China has ultimately said that they are going to be, well, Xi Jinping said that he's going to be going forward with, advancing on Taiwan, uniting Taiwan. That's what he promised everyone last year when he took his illegal third term as president. And we need to know something. NVIDIA today does not actually produce their chips. Taiwan Semiconductor does. And so if China advances on Taiwan, how does that mess up this AI thing? How does that mess up NVIDIA? That's my only caution on going too heavy that direction.
Yeah, understood. And you also have biotech here as a sector that could benefit from AI. Tell me about some of the other sectors that could benefit from AI and how you would maybe play those.
Sure. Well, biotech and healthcare are going to really capitalize on AI. Why? Because AI is going to make things a lot more efficient. Just think advances in medicine, taking old medicines and repurposing them because we can understand their efficacy in other ways. So AI is going to really do some awesome things. I'm just going to also note this as well, and that is AI is going to also make commodities and mining a lot more effective. Because see, when they can ultimately, look at this data, see deeper into the details, they're going to make better decisions. And so therefore, their dollar for dollar is going to be, applied in a more effective manner. And so I'm really excited about some of those improvements in AI. Certainly, there's going to be some negative things that we'll see at some point here with it. But, new integrations are going to ultimately lift supply because demand has been curbed down. Because of the interest rate challenges with Jerome Powell. And, these are exactly what we need in order to continue to see GDP grow.
Right, understood. All right, David Stryzewski, thank you so much. It's great to see you. Glad to have you on today. CEO of Sound Planning Group. Thank you. Coming up, we can